Hi, this is Rob Roy of Elliott Wave Options, and welcome to this week's U.S. market update. As we do each and every week, the stocks that you see on your screen now will be the stocks featured in this report. And if there's a particular stock that you're interested in, you can go to it directly using the chapters feature on the video. All right, so let's start taking a look at the market. We did have a little bit of a reversal today. We were up early, pulled back a little bit. The economic news of the week was pretty interesting. We had Chairman Powell's Humphrey Hawkins testimony, where there used to be legislation from Senators Humphrey and Hawkins, and that was where they required, and I put that in quotes because the Congress can't really require the Fed to do anything. They're independent, to testify in front of Congress twice a year, every 6 months. And after that legislation expired, the Fed decided that, hey, we'll just out of the kindness of our heart continue to do that. Well, there's two places, right? We have the House and the Senate. On Wednesday, Powell sounded a little bit hawkish, but then on Thursday, Powell came out with a comment that the Fed is not far from cutting rates, and that put a bid under the market on Thursday. And then today, we had the jobless claims number, which was going to be heavily watched. As you know, the Fed is really trying to cool down the jobs market. And even though it was a little bit hotter than what was expected, it was still down from last month. So it was also viewed as a positive, at least early in the trading day before the recovery. We are doing this update during the market hours, so we'll see how things close today. But as far as where we are right now, looking at the chart of the S&P, you can see that we traded higher and then moved down. But we're still nicely in this 45-degree angle, just a nice little melt up in the markets. If we look at the 10-day moving average, just following along, again, it's just as classic as you want to see a wave 3 move to the upside. Note that this wave 5 target has moved up to the 534 area. At one time, it was at 520. Way back, it was at 500. And that leads me to believe something, or leads me to say something that gets asked about a lot, is why is this for here? And just as a reminder, the software, and by the way, the software is from the Hub organization, hubb.com. I think it's the best Elliott Wave software that exists on the market out there. I've been an Elliott Wave trader since 2001. I'm going to use the best software that I think exists. And just as a reminder, the Hub organization is releasing a live version of this software. You're going to have live intraday Elliott Wave counts, and it's in beta form. So all you have to do is go to hubb.com, and you can get a free copy right now. It's nothing to download. It's web-based, but these are projections. So this is not saying the wave 4 is underway. It's saying that if the wave 4 were to start today, that's where you could expect some support, and then the move to the wave 5. But when you're in a wave 3, the algorithm likes this price, so the wave 3 could go there, or we could have a correction first before the move back to the upside there. And as the wave 3 continues higher, these projections move. So that's one of the great things I like about Elliott Wave. The market is not static, the market's dynamic, and you better have a technical indicator that moves with the market. And that's the great thing about Elliott Wave, in my opinion. All right, well, based on Chairman Powell's comments yesterday, we did have a move down in rates, kind of just status quo on the rates today. I don't know if that's maybe why the market kind of reversed intraday. Maybe it was just some private taking going into the close. As you saw from the chart, we're not really getting to the point where we are overbought or oversold, just following that 45-degree angle trend line. Rates are moving down, maybe a little bit faster than I thought. I had mentioned that I didn't really see the catalyst to get rates this low, but we are back on that June rate cut. Even the ECB is talking about maybe June for rate cuts, but I still don't see the 10-year going down quite that far. I think we're going to find some footing around the 3.9 or 4% level, but that's just pure speculation on my part. There's 3.9 and here's 4, so we could go a little bit lower, but maybe we do go down there to the wave 5 if the economic data comes in continuing worse. We did have the ISM services report come in this week for the first time under 50. and 50 is a key level. Above 50 means growth, below 50 means contraction. The services sector has been the hot sector, so you look at that as perhaps a sign of where things are to come. But when you looked at the jobless claims today, the jobs report was showing jobs were added in the government and services sector, so just not as much as expected. Looking at the dollar did weaken a little bit. It's kind of flat at the time of this recording, but we finally broke that 104 level where we've been for over a month, which was a good support resistance level. I mentioned last week in a market update that I'd read that the U.S. is adding $1 trillion of debt every 100 days. That's staggering to me. And I was wondering when that would affect the dollar, and perhaps the fact that we're getting at least one report of weaker economic data is starting to move the dollar just a little bit lower. But, it's a double-edged sword. You also have the benefit from international companies from the exchange rate. So until we start to get the dollar way down, and it's down here around 96, is the level that would concern me on the dollar. So the fact that we're breaking to the downside makes sense, but it's in no way a concern over the dollar. It's surprising to me because the rest of the world still puts money in the dollar. They still feel like we're the place to be. Powell even said that of the major economies, we're doing the best. The globe seems to agree with them. Money is moving into the dollar, even as the amount of debt that we continue to acquire. All right, so let's start moving into some of the rest of our markets. The DIA just kind of ho-hum right here. We went up, we hit that wave 3 high, and now we've been consolidating here around the 390 level. We're high enough to where, gosh, it seems like we'll hit at least 400 before the move is over. We had the big move, as I've mentioned several times in these past recordings, moving into the end of the year. I do feel like there was some portfolio rebalancing, some market money rotation into the Dow, expecting, as I did, weaker economic data a little bit sooner than what we've got. I thought it would be a little bit earlier in the year, and then we've moved. You can see the difference in the angle there. So there was accumulation going on into the Dow before the end of the year, and then now we've just been kind of slowly creeping to the upside, and now we've hit some resistance here at 390, but perhaps we continue to drift up towards the 400 level. I'll be surprised if we don't do that between now and the summertime when the rate cuts come. By the way, the rate cuts will likely be a buy the rumor, sell the news thing. So I think people may be waiting on the rate cuts, and they're going to be a little bit disappointed. I think when the rate cuts actually start, that's when we can maybe see a corrective move. All right, now the Qs. Oh, we've been talking about this. We talked about it Tuesday night during TradeFinder. And by the way, we do TradeFinder every Tuesday. We're going to be moving it to during market hours. Next week, it starts at 1 p.m. Eastern time. But if you haven't registered for TradeFinder, you can do so on the link provided here. Please go and register. We have a great community. We talk to markets. We look for trade ideas. And we have a live Q&A at the end. And it's going to be at 1 p.m. Eastern time starting this coming Tuesday. So during the market, which will be really cool, especially with the new release of the software where we'll have live Elliott Wave and be able to talk about that. So register for TradeFinder. But the big thing on the Qs was, is that going to relabel? And it hasn't, even with the move up. The 5 just keeps hopping over. We started here with the 5 right there. Then it moved over here. Then it moved over here. And then today on the high, it moved over here. So no relabeling on the Qs, which is interesting when we have a wave 3 in the S&P and we have a wave 3 in the Dow. But yet when we look at the Qs, it's a wave 5. The patterns are similar, but normally when this discombobulation that I call it occurs, the patterns aren't necessarily the same, but the labeling becomes congruent. And which one is right? Are the 3s right? Are we still in a wave 3? Or are the Qs right that we're going to be moving back down sooner rather than later? But they will fall in line. And the question was asked on a recent U.S. market update, can a 3 relabel to a 5? Yes, it can, but it's usually or happens more often that a 5 relabels to a 3. All right, looking at the Russell, also in a wave 5 here, and we hit 210 today, which was really key because we've been in this range between 190 and 210 in the past. That was the trading range. We'd gotten up to 205, and that seemed to act as resistance for a while with that wave 3 high you can see there. We do have a really nice ascending triangle, which we're trying to break out to the upside here on the Russell. With this move today, that's not quite the follow through that you would have wanted from yesterday, but perhaps into the close here, we bounce off the lows. But you don't want to see a follow through day close on the lows of the day. But it does seem like the Russell is starting to break out to the upside. And if that does continue, now we get false breakouts out of these triangles, but if that does continue, then we could see a big move to the downside, as well as this is just a head fake. The market does that a lot. So where we close here will mean a lot on the Russell. But as you can see, it's trying to sneak out for an upside breakout. Looking at Bitcoin, my goodness, what a vertical move we've had. We're up here around 68,000. We seem to be consolidating that move here. We go up and down, but back and forth. But the move up to 68,000, we talked about that on the Hub Financial channel. If you haven't gone there, you can go over to Hub Financial here on YouTube and register or subscribe there. We do live shows on Friday. We talk about cryptos quite a bit there. And we had thought about 60,000 before the halving in April 18th. We're already past that. So obviously, we're likely going to be higher before April 18th, and pushing 90,000 or 100,000 is the speculation by the end of the year. So as long as we consolidate here, you can see the separation that we had gotten from the 10-day moving average here in the last couple of trading days, including today. We seem to be just kind of pegged around 68,000, but a big move up in Bitcoin. And as long as the U.S. continues to issue debt at the alarming rate that they are, I think alternative currency choices, whether or not we end up in digital currency. The question was actually asked of Chairman Powell yesterday about the Fed's version of digital currency, and there didn't seem to be. He kind of poured some water on that, that he didn't see that coming anytime soon. I don't think the Fed is going to release, and if you're not familiar, the Fed has their own digital currency, which was expected before now. But Powell seemed to think that they're nowhere near releasing their version of a digital currency, so the dollar remains the place to be. But a lot of people are looking for alternatives, and hence the move up in Bitcoin. Looking at oil, gosh, oil looked like it was going to break finally above 75. We've been there for so long, and it looked like maybe we could break that level and move up, and then no, we've broken back down. And if the economy weakens, you would think that would be negative for oil. Look at the size of this ascending triangle. All you have to do is go to our website at EWOTrader.com. You can see the cars that I drive. I'm an old motorhead. I like the big V8s, all the classic cars type of thing, are what I have and own. And it's not fun going to the gas pump when prices move to the upside. We have a huge ascending triangle. And just remember, I remind everybody of this often, that an ascending symmetrical or descending triangle can break either direction. An ascending triangle does not have to break to the upside, unlike some of the stuff that you see out there on the internet. We have the data to show that a triangle is a triangle, and it can break either direction. So just when we thought maybe there was a bit under oil and it was going to move, we're right back into this triangle. But there is going to be some sort of a significant move in oil. OPEC came out and said they're going to continue with their cuts of 1 million barrels a day through at least the summer. I think they said June, so early summer. I'm surprised that they didn't do more than that. They've said that they know that there's a limited amount in the ground and they want to get as much out of this as they can, make as much money as they can. So that didn't seem to be enough to propel the USO higher. And just as a reminder, each and every month this year, we are giving away one of our level 3 subscriptions to any person that posts a comment under these videos. All you have to do is post a comment and you're in the drawing. I read each and every comment. I respond as often as I can based on scheduling. But our level 3 is our impulse strategy, which is now infused in AI, which is yet to have a losing month. We then have volatility strategy, which are triangle breakouts, a la what we're seeing here in USO. And then we have an AI-based time strategy for sideways trading. So we have all different market directions covered in the impulse strategy. People ask, does that cover downward moves as well? Yes, it does. So again, leave a comment under this video and you're registered for this month's drawing. So I wanted to get that in. So here are some of the symbols that y'all asked for last week. UNG, you can see this big gap up here. That's a reverse split, which is what these ETFs do at some point. Used to be Reuters, it's Refinitiv now, which is the data source that this software uses, will adjust this split so it won't look like such a big gap up. But you can see that right after the gap up, UNG still came lower. I would say that at least at this point in time, the support is at that wave 4. But you know, it's been a mild winter around the country here, and there just hasn't been anything to give a bid under UNG. So we had a little bit of a bounce from an oversold condition. We look at the 10-day moving average, you can see that we tried to get above it, but now we're back below it again. And as we're starting to come out of wintertime, I don't know what the catalyst is for UNG to move higher. I wanted to trade it. I've been looking for an entry for it, but there just hasn't been one. And this mild winter, not favorable for UNG to move to the upside. Someone also asked, why can't we show the weekly chart of the S&P? That's a great idea. We haven't looked at the weekly chart for a while. And the comment was that, yeah, we've been kind of straight up without a pullback. And if you remember way back here, when we were testing those highs from the end of 2021, Jeffrey Gunlock had come out. He's known as one of the bond kings. I do look for his commentary on the bond market. I haven't found his equity commentary to be too spot on. And he was talking about, oh, I see a double top in the market. Well, he was wrong there. You can see that we've just continued to power higher. Now, depending on where we close today, we may have a bit of a doji here. Maybe that sets us up for some sort of a pullback here. You look at the 10-day moving average, we're not that far above it, but yet this is more than a 45-degree angle move. So yeah, we've been kind of moving to the upside here. A little bit of a pullback could be warranted. I don't think it'll be anything of significance. I still feel like it's a buy the rumor, sell the news on the Fed rate cuts. And as long as the market is anticipating the rate cuts, we're likely to move higher. But once the rate cuts actually get here, I think that's when we could see a correction. But it'll be interesting to see what happens next week if we do have a doji here. Is there any sort of a pullback? But just as a further reminder, I don't think any sort of pullback is going to be significant until we get to the rate cuts. You also ask about TLT. Now, this is the 20-year, so moving towards the longer end of the curve. We look at TNX. Now, remember, that's rates. TLT is pricing. So prices and rates or yields move in inverse proportion. So when you see prices go up, that means yields are going down. Now, on the TLT, we have a 50% wave 4 here, which is a pretty solid level. And you can see sitting right in here. So it does look like, to me, that TLT wants to move higher from here. There's the 10-day moving average. We got a little bit above it. We're consolidating. So on the long end of the curve, it does look like prices may go up, maybe yields come down. Perhaps that gives further support to the housing market. We'll see how that plays out. But it is interesting to go a little bit longer on the yield curve here with the TLT. Apple, y'all ask about Apple, and that was timely too. You can see that we're not in a 5-wave impulse pattern here, but we had support right down here, pretty easy to see at the 170 level. That's a key level. And so far, Apple has held it. It's one of the better performers in today's market. A couple gaps here that need to be filled. But Apple also has resistance back up at 180. So perhaps you get a little bit of a short-term trade out of Apple, but look at that. There was great support at 180. Apple's going to have a hard time getting back above 180. I don't think you can go long for very long with Apple, other than just this trade here, an oversold trade. There's the 10-day moving average. You can see even with today's move, we're not back to the 10-day moving average yet. So maybe we kind of do what we did back here at the end of the summer, early fall, where we had a trading range between 170 and 180. I think that's kind of what's setting up here. So maybe a continuation short-term bullish trade here on Apple, but you can't go long, in my opinion, long-term bullish on Apple again until it gets above 180. And gosh, wouldn't it be nice to see them actually come out with some new technology at some time? Coinbase, look at that move today. We're getting a little bit vertical there. We did feel like with the move in Bitcoin, it would drag Coinbase along with it, and it has, but we are in a stratosphere now. There's the 10-day moving average, so a little bit overbought. You can see on the high, just can sustain it, and perhaps a little bit of a pullback in Coinbase is warranted. I don't like these vertical moves. Those of you that have watched a lot know that one of my expressions is what goes vertically up often comes vertically back down. At this time, with Bitcoin likely continuing some sort of a bid into April 18th, I don't know that the pullbacks will be real severe, but Coinbase looks to me like it needs some sort of a pullback. It may only be back down here in the 240 range. That could be where we go as far as a pullback. That would allow the 10-day moving average to catch up. If we do move a little bit lower, there's some stair-stepping support here on Coinbase, which should make you feel good if you're long Coinbase. 220 has a little bit of support, and then the big support is down here around 200. So I do think that we're just a bit too in front of this move on Coinbase, and a little bit of contraction here might be warranted, but it could find support at any one of those levels. And then last but not least, we don't want to leave off the international market. The INDA just continues its ascent higher. We've got EWG that's broken out, EWA, Australia, Germany, even Canada have all broken out of those ascending triangles. We talk about those on Tuesdays during TradeFinder. We cover all the international markets as well, but here we like to keep one in. And it's just hard not to talk about the INDA, because that is just what you want your move to look like. This nice, perfect 45-degree angle move. The corrections are not as severe. That's why we like 45 degrees. If you're wondering what's the significance of a 45-degree angle, it doesn't have much of a correction. Market goes in impulses and corrections. That's the crux of Elliott Wave. That's why Elliott Wave works so well. It's dynamic in that area. But when you're in a 45-degree angle, the corrections are not that severe, and then you bounce back to the upside. So we're continuing this move, at least so far, in the INDA, and I don't see anything to move that. We look at the DMI. The ADX is kind of low, so it's saying that there's not a whole lot of strength to this move. So what does that mean? Is this divergence with the fact that the ADX is not confirming that move by showing strength? Or is it that we're going to continue this move as the ADX does get its act together and move higher? As nice of a move as that is in the INDA, until the ADX confirms that and moves higher, I would say that, yeah, you want to be a little careful on the upside here on the INDA, but that's the angle that you want. So that one's a little more challenging as far as, do you like this angle of ascent here, or are you concerned about the fact that the ADX hasn't really confirmed that move? But what it means is if the ADX does break higher, because there's still good separation between these two directional indicators, if the ADX breaks higher above 20 and 25, that means that the INDA has more to run. So we'll keep watching that each week, because it's going to be interesting to see where it plays out. Hope you have a great weekend. Thanks for watching as always. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.